I bring you another episode on intraday trading where we look at how we could have taken intraday trades uh, had we been trading in the market. So I'll go over the trades for yesterday, 30th of April. So I've got some stocks added here, as you can see. I've got a couple of indices and I've got a couple of stocks that I usually take intraday trades in. So let's go to sale. I've added a session here. So what you see here basically is the session start and it's ended here at 15:20 is where it ends for us. This candle was the last candle. Now this candle has opened. If you look here, the last this candle, the last candle was 164.85 and we opened at 165.80. So it's a gap up and the way I'll zoom in so that you get an idea. So from here, directly we opened a gap up. So if you had gone long here, the very next candle would have basically taken out your stop loss. So you've got a bearish engulfing here, and it's just the start of trade. So it's good that if you were just watching if you were watching the 5-minute candles for a while till market stabilizes, then you had something like this long bearish candle, which is a bearish engulfing candle, and some buying pressure here. And people who would have immediately gone short here at the end below the low of this candle, and then immediately, if you had your stop loss somewhere here, it would have gotten taken out. And then again, people who went long above the high of this candle, again the stop loss would have been hit. So you see that these are basically market is whipsawing, and or you can call it bull and bear traps, whatever terminology makes you happy in life. That market would have taken you out here, and then after this big bearish candle, you have a sort of bulls trying to basically take the price upward, and the price you see a candle here, and then you have another small candle here, and the volume has also gone down. So here at this point of time, you have the price which is below all the moving averages that you see, the 9, 20, 50, and the 200. So this would be a good place for you to go short. If you had gone short here below the low of this candle and you kept your stop loss above the high of this candle and some breathing space, you would have made some money. Let's say the low of this candle is 164.60, right? So you went low at 164.50 and your stop loss would have been at, let's say, 165. So you would have had a decent run. You would have had a decent run here because the stop loss would not be hit. Some spikes here, but nothing is happening. And finally, if you were basically a very relaxed trader and you wanted to see how it played out without moving your SL, you would have at the most gotten out here as soon as the price started crossing the line EMA. You would have gotten out here. So you would have definitely made some money because 164.50 and the price has gone down to 163. So more than 2 rupees here, and even if you sold here, you would have still made some money. Now, if you didn't get an entry here, if you see here, the price is going down. The bulls try to bring it up, but again, no go. Again, price is going down here, and buyers tried to basically take it up, but the sellers bought it down. So this is all in all a very bearish candle, and then you have another bearish candle. So you have a close here, then and an open and a close below. So you're getting a lower low. Bulls tried one final time, but no go here. So this again will allow you. The bulls have tried twice here, so this would give you a chance for another entry because it's close to the EMA. You could have shorted here, close to the EMA, and your stop loss would be above the high of this candle. So if you took a stop loss at 164 and you went in at 163.80, you would have had a decent run up to here, and you could have waited here, and then again once you see the candle, you don't even need to wait for the close. If you see the price has gone above, you could have gotten out. And then again, prices in the jumble here, you have a bullish engulfing, and then you have so many inside candles suggesting indecision in the market. Like there's a red candle, there's a bearish candle here, bear here. If you took a short below this one, uh, your stops would have gotten taken out because your stop would be somewhere here. And then again, if you took a buy here, your stop would have got. If you kept it in the low below, then it wouldn't have, but you wouldn't keep such a big one. So probably your stop would have gotten taken out here. So what's happening here basically is that this is a sideways market, as simple as that. And right now we are currently here where my cursor is. We don't know what's happening here. Okay, this is all hindsight. So we don't know. We just look at what we have. So whenever I'm speaking, please understand I'm speaking from the start till the candle. I don't know what is going to happen after this candle. It doesn't exist for me because I'm commenting as if I'm in the live market. I'm teaching you how and when you can take a trade. And again, this is not the holy grail, but we're looking at candlesticks, we're looking at moving averages, we're looking at volume divergence. We're seeing the overall nature of the market. So, and looking at that, we are going to decide whether we are going to go long or short or just wait it out. So, because price in the jumble and the moving averages are coming below, the only thing you would go for is a short here, definitely not a long. And you can't go for a long any which ways because the price is below the moving averages. You can definitely go for a short here, but looking at this behavior before and here, you should wait it out till you see a clear direction. Price has to go either down, firmly down, or price has to go up. Now, we are waiting here, assuming that we took some trades and we either made a profit or a loss, and we're waiting and watching. So you have a price here, and if you see here, you have you have some kind of support here, and prices bounced off, and then slowly but steadily, price is going up. Now, should you take a long here, or should you have taken a long at the high of this? I wouldn't, because you have your EMA as a resistance. Again, one more you see. Can you see only 5 paisa? And the volume is also low, so it's a divergence. And then again, you have a long, nice big green candle, 0.3%, 50 paisa move. So can we take one above? I wouldn't, because again you have your 50 and your 200 and your VWAP, so you're below VWAP. So it's best not to test your feet and your account by doing something here. And if you see that the price has increased, and the price is increasing with volume. One, two, three, the volumes are increasing. The volume is supporting now. Now see this beautiful, wonderful bar where you get 0.8%. Now, can we take a high over here and keep a stop loss below? You can, no harm, but it's not good practice. Why? Because the looking at the price and the volatility, which is 57 paisa, right, for a 5-minute candle, 60 paisa. Okay, look at this. Well, look at the volatility here, right? Average true range volatility indicator. So I have taken a 12 ATR. Volume of the last 12 is around 60 paisa because we don't have 57 in the market. We move in multiples of zero point 0.5, which is 5 paisa, 0.05 paisa. So 0.05 rupee, meaning 5 paisa. So such a big, if you take a long above the high, your stop loss has to be below the low of this. And you are going to take a 3-time ATR risk for what? Are you going to get 6 times ATR? You can, but chances are very low. Getting 1:2 in intraday is also very, very difficult. This is not options where the premium will move at rocket speed and you can get 1:2, 1:5. This is equity, and unless you catch a trend and it goes firmly in one direction, chances of you getting 1:2 are rare. So you should not here do anything here. But this is told you that the rising volume here and the rising candle. So you have volume and price moving in the same direction in tandem, meaning market has decided bulls have overpowered the bears and we are going to go up. So what you have here is you're going to have the market test the previous high, which is here. The previous high is going to get tested here and it has been broken, but we don't know that. We are right here. We are right here now and we can see that this is a market high and it can act as a sort of a resistance. So we wait here and then we have a bearish candle here, bearish candle, and now we have a bearish candle here. What do? We don't do anything here because we can't short here because we are above the VWAP and the moving averages are sloping upwards, so we can only go for a long. So let's wait, and then you again have a candle. If you see here 164.90 and this is opened below 5 paisa below, and then finally we have a piercing candle because this is a piercing candle and you would have taken a long at the high of this candle, 5 paisa above the high of this candle. Stop loss will be below this candle or below EMA 9 and give 5-10 paisa breathing room, and you would have gone for a trade and you would have stayed in the trade. And had you not, if you didn't get out even here, if you got out only below a candle close, then just see 164, you are gone in at, okay, you're gone in at 165.60 or 55, 165.60, let's take it, 165.60, and you've gotten out at, so 1 rupee 35 paisa here, if you waited for a candle close below the EM. Or you could have sold somewhere here at the high here or the high here or the high here. Or you thought that this might break resistance or you sold it here, but you still made some money. So now those who did not get at the high here, what are they going to do? They're going to see, okay, we have another candle, but there is selling pressure here. So those who went long above this high here would have had a very big SL and they would have still made some money had they not gotten scared when the price retraced back to the EMA. So we got to basically we are watching the market and you have some bear bull tussle going on and we're going to do and we do something like this. Okay. So now we are seeing that the price is steadily going up. You have a bearish trend here. You have a bearish trend here. So basically, because we have two tries down here, you could have gotten an entry here because you're close to the trend line. Bears have already tried pushing the price down twice, and you would have and our target would be a touch of this trend line here. So if you see here, the close is 166.35 and you open at 166.40. So even if you got it at 166.50, you would have closed here. You would have basically, even if you sold at 168, you would have made 1.5 rupee here. So because you have to sell here, this is your target. And then you have a new high and then bears first leg down and it's broken the trend line. Now that it's broken the trend line, what you will have basically is testing a new extreme. And so testing a new extreme and price can either go very, very high or very, very low, but it will, a break of the trend line basically is going to lead to testing a new extreme. So you had nice movement here and the, you broke the trend channel line and then you have a huge bull candle and the bull stride here and then again you have something like the bears matching them uh, for, rupee for rupee, paisa for paisa, and let's do something here and we are here Remember, we are just here and the price is broken through. We are already out of the long here. So can we take a short here? Immediately, no, we don't know whether this candle is going to break upwards or downwards, so we wouldn't do anything here. So we watch, we are here. And now, as I told you, this was the previous open high, day high, and is first it acted as sort of a resistance and now it's become support. Can you see here? Now you have this price tried to go below, but it couldn't. And basically, closed 5 paisa above. And you have a huge candle here. Bulls not willing to give up. They want to take it in the direction. And they are done it. Then you look at the next candle. See, the volume has gone up, but the price is not. So there is a clear price divergence here. And you know that something is going to break. And then you have a further volume. The bulls tried the level best, but price is basically kind of reached an exhaustion. Buyers are all exhausted. And when buyers are exhausted, do you know who comes in? Can you tell me who comes in? If you say it's Gabbar, that is the wrong answer. You get a whole lot of Gabbars coming in to rob you of all your riches, and you will have something like now the bulls have had the day. It's the bears now, and if you see here one candle, you see another candle here. Can you go short here? No, you should not because you have these EMAs which will act as support. So you wait and watch. Bulls tried again, no go. So right now we have these candles, and I wouldn't be making this trend channel line here yet. But I can definitely do something like this. I'm only here, right? So what I can do is, at least I can do this much, right? I can do this much. So you see, buyers tried, no go. Then sellers tried again. So let me zoom in. You have something here, and again, price is going down, and you shouldn't try to short here because you have EMAs that can act as support. So when could you finally short? Let me drag this further. When could you finally short? And remember, I'm just doing this now. But when we were here, I did it only up to here. Can you short here? Can you short here? You can, but then you have something like a support here, so you don't know. So it would be unwise to short here. You have to wait till prices crosses below VWAP. Once prices crosses below VWAP, again prices can get support on the EMA 20 to 200, which is a very, very strong support, one of the strongest supports that we have in the market. So if you shorted here below the VWAP, below the low, your target should have been this and you would have made some money. So if you shorted here at one at the low 165.60 and VWAP 200 165.60 and you would have a target of only 35 paisa. If you are good with that, then you could have done because you have to take your target before it hits here because you never know. Can you see here? I'm going to remove this so that you guys can see. See, it's taken support here. It's bounced off. Sellers tried to push, but buyers, because buyers know EMA 200 is a support. Tried again. There's a spike. See the volume. Huge volume. Double the volume. 1.5 mil. But no can do. Buyers have pushed it back. Why? Because the buyers have 200 elephants behind them. EMA 200 is like 200 elephants. But try once, try second time, try third time, and finally the bears bought a heavy duty machine gun and they shot the elephant, 200 EMA elephant down. And that's just an analogy. I love elephants. Nobody should look at elephants but with anything but lots of love. So that was just an analogy that this is a hammer hitting it again and again and again and again. And finally, bears have broken and you have a strong bearish engulfing candle. And if you see here, wicks are also not very high. See the volume. Volume is a bit above the 20. And you could have easily taken a short below this one. and you have something like a hammer here suggesting that price could reverse from here. So if you went short below here and you kept your stop loss a little above the 200 EMA, you would have still made some money before 1520. But if you waited and you saw the hammer and you said, no, this is a hammer at the end of a downturn. What this means? This means that sellers have lost their power and buyers are going to now create a bull run. Then this is a nice hammer and it's come to fool you. And if you got out here after this, you would have lost this extra money. So this is basically a, a red hammer. Now what this means basically is that they tried to bring it down. Price opened gap up. Buyers tried, but ultimately it became a red candle. Buyers tried. Let's see here. Let me remove this. Select and remove. Can you see what is the close price? 164.55. 164.55, 75. So the bulls were trying here. 20 paisa gap up. So the open is equal to the high, and unfortunately, and the low went up to 164.15, but buyers bought it back to 50 paisa up to 164.65. So this is a good sign that the buyers did claw back, but this is a red candle. So don't get fooled in here. But there is buying pressure here, and there is buying pressure here, and we should have seen a candle that would that should basically, by and large, what happens is at the end of a downtrend, when you have something like a hammer here showing buying pressure, price normally reverses. So if you got out after this, it would be okay. But see what has happened. 164.65 and again gap up opening and a huge down candle, and see the volume. The volume is below the 20, but the movement is high. Again a divergence. So then that's why you see a green candle here. So this is all I had. I just took one stop, but I spent a lot of time, and I hope you guys got value out of it. And it looks easy here, but it isn't easy in the live market simply because you don't know the right side of the chart, and I'm also not depending on it when I'm analyzing and explaining it to you guys. But still, in the live market where you are watching each candle is going up, going down, a doji becomes a bull becomes a bear, and it could become a hammer or it could become any sort of candle or any sort of pattern, and then finally closes as something else. So what looks like an apple but turns out to be a mango, and later on a brinjal. It's a little so you have to basically wait for candle closes before jumping to conclusions. I hope you like the value that I bring to you. If you haven't subscribed to my channel, I would like you to subscribe to my channel and hit the bell icon so that you're notified of new videos. And I'll try to bring you new stuff every week. Please like and subscribe my channel. Download my videos if you enjoy them. I wish you all the best for your intraday trading, and I'll see you soon. Thank you for watching. All the best.